Welcome, guys, to the watch list for the week of February 15th. So, last week, even though it felt like a lot was going on the larger time frames, on the weekly charts, at least there wasn't much going on. It was an inside week. I'm going to remove the drawings real quick, and you guys can see that. We had closed the previous week below the 9 and the 21 MA on the weekly charts. And this week, ideally, we would have been above the 9-week moving average. That didn't happen, right? Early in the week, we had this bounce that got rejected right at the 9-week moving average. You guys can see that. And we closed the week towards the bottom end of the range. This has led to a lot of people being extremely bearish on QQQ, SPY, the overall markets. All right. So as usual, we'll begin with the larger time frame, slowly move on down and read the context for what it is. On the larger time frames and the monthly charts, you guys can see it is the first consolidation since the breakout that we got in June. A lot of people are comparing that to the consolidation that we had at the start of last year, right? So, sorry, right here at the start of last year. But that was a different kind of consolidation. That was already a year and more than a year trend, almost a year and a half before we broke down. This was the first consolidation out of that breakout in December 2023. You guys can see this is the first consolidation. This was the second one. We had already ran through the trend there. This is not the same situation. Either way, on the monthly charts, we are still in that consolidation. We are still in the range that was carved out in November. All right, so let's move to the weekly charts. Now, on the weekly charts, I can understand why there's so much bearishness out there. We rejected the 9-week moving average. We closed below the 21-week moving average. Obviously, there's this panic that, like last year, we'll just collapse. All right. So we are going to discuss the context around that. First things first, last year, semis were already lagging. This entire last leg that we had from late 2024 to all the way to March 2025, semis were already lagging in that period. If you guys go and check stocks, you will see. From late 2024, so this is your late 2024 all the way to 2025, we never went anywhere showing strength. Semis are usually a very good leading indicator of risk on and risk off market behavior. And you guys can see this time semis are in full strength. They are nowhere near lagging. And it's usually a very crucial sign. So that's the first thing. The second thing is a lot of people are recognizing the pattern from last year. And I wrote a quote on Substack yesterday saying that surprises often move markets, not what the market is already expecting. So the obvious never moves the market. Surprises almost always do. And that's the thing. Last year's pattern repeating exactly the same would be the obvious. It's a pattern that everybody is keeping an eye on. The entire Twitter feed is full of that. Actually, it's a very recent pattern too. So markets almost never does what everyone expects, and it almost never does anything from recent memory. Now, am I basing my entire analysis on that? Am I saying be bullish completely, right? The last year can't happen? No, we are in a probabilistic game. At the same time, there's no point in getting uber bearish as long as we are still in the range. So we'll discuss the exact levels below which you can be bearish. But as long as we are still in the range and given all the bearishness out there, it's a bit crazy to get too bearish just yet. All right, so that's one thing. The third thing, the put call ratio. All right, so the hedging is almost at the levels that was at the bottom here, at the bottom of the Liberation Day events. So the put call ratio already is at levels which we had seen after the entire crash of last year. So we are already hedged to the maximum for a bearish scenario. Again, market almost always disappoints everyone. So the fact that everybody's already prepared for downside reduces the likelihood that the downside will occur. So those are the factors, just psychological as well as technical, right? Technical, we are still in consolidation. We haven't really broken down. Technically, semis are stronger, which wasn't the case last year. And then just psychological, a lot of people are preparing for bearishness and market almost always disappoints in the direction when a lot of people are prepared. All right. So few things there. Let's discuss the elephant in the room, which is the large caps. Before we go to the large caps, one more thing. If you guys remember this entire BTC scenario, right, the BTC sell off, if you guys remember the sentiment which we had in the consolidation here, unlike what's happening with the indices, when we were in the consolidation here, almost everyone was expecting bullishness. And I had mentioned in the first AMA of the year, as well as in the first weekly watch list, guys, any bullishness will be choppy, so it's not worth it. But almost everyone was expecting a push up to the 50-week moving average and a potential break of 100K or 104K. No one was expecting this kind of scenario, which is quite the opposite of what's happening with the indices right now. Everybody is expecting this kind of scenario, and you guys can draw the parallels. All right, so let's go to the Mag 7. Microsoft has already collapsed for 4 months straight. All right, from the peak, it's down around what? From around 550 to 400. All right, that's around 25%. So it's already down. It has already filled the gap. We have Amazon that already went from peak of 260 to around 200. Right, that's a 30% drop. Google already sold off. Well, Google is actually was one of the stronger ones, hasn't sold off as much. It's still in consolidation, but it already showed weakness last 2 weeks. Apple, out of nowhere, it was looking as the strongest mag, and then out of nowhere last week had a very bearish candle, sold off 5% on Thursday off of no news. All right, so a lot of it is just AI scare trade. Now, am I saying Apple will bounce right off the bat next week? No, it can have some more weakness. I'm just talking about the crash potential that people are expecting. What else? Meta is already way below its peak, and Nvidia is the only one that's still holding. And that's just the Mag 7. A lot of individual names, a lot of momentum darlings of the markets of the last 4 months, like the IONQs or the Spot, Netflix, all of them have already sold off quite a bit. So where is this bearishness or this crash going to come from? If everybody is hedged for it, a lot of the market rotation has already happened. Where is it going to come from? So you guys can see, like, I'm just trying to present a counterpoint to all the bearishness that's out there. So let's go and discuss the levels for QQQ first, and then we'll discuss the individual Mag 7. So you guys saw the structure of Mag 7. Could we get some weakness? Yes. Next week, first of all, this was an inside week, so next week can be a bit volatile. If we go below the lows of this larger week, we could go back to the support area around 587. All right, 587 to 580, that's our major support. If we close below that, we can see a lot more weakness. If we start to close below this 580 area, we can see a lot more weakness. That's